All right, so now that we've gone over the simplicity approach and introduced you guys to it, we may as well hop right into some examples. So obviously, when we're looking at this day here, this is EG on the 10th of June. You know, it can look a little bit daunting just looking at the day as a whole. So what do we have to sort of help ourselves? Well, we've got the simplicity approach. So let's start with the first step. So what is the first step in our simplicity approach? It is our build-ups, right? So what do we want to do? Well, we want to identify the build-ups. If you can't identify your build-up, then just stay away until you can. So let's look at this. Obviously, within Asia, we're going to have our build-ups. There are some that I have not included, so I'll just draw them on as well. But obviously we have our little build up here, induced to the downside so that we can continue higher. And then from here, we also have little build up. Again, these aren't really things that you trade, but we'll just show them. And then look, over all of this, we've got this larger build up, yeah? Prices moving between this channel right here. And then coming down, we see, okay, we see this, so we break out of this build up. What does this mean? Well, this is a build up like this. So when we break out to the downside, where people are going to be looking to take this short, the retail traders are going to be looking to take this short. So, you know, that's already a little hint for what's to come. This has other confluences to it, but I don't want to like give you too much right now. We're going to give you bits and pieces of the simplicity approach, and then when we teach you a bit more, we'll give you the full simplicity approach, and you'll see how good it is when it all comes together. Right, again, we have build up into inducement high, and then again we have this build up into inducement low, also inducing Asia low over here, and then again channel build up into what? Inducement low, and then again channel into inducement high and channel into inducement low. So we've identified all of our main build-ups, and like I said earlier, if you can't identify the build-up, then just stay away from it. Don't panic, just wait until the build-up becomes clear, and then you can start to like realign yourself. So after we've had our build-up, what do we have next? Well, we need to identify the inducement. What does the inducement do? It either stops retailers out or it makes them open a position. Sometimes it does both, and that's the best, but normally it has to be doing one of those two things. Also, you'll see me bang on about it a lot, but it's very good if you see an inducement with, like, in this case, rapid movement or like rapid momentum, like lots of speed, because what that does is, imagine you're a retailer, right? And you've got your, let's draw it out. So you've got this right here, and let's say you're a breakout trader. So when these highs get broken, you're looking to take the buy, right? And then what is going to entice you into the buy better? This kind of price action where it's slow, or this kind of price action where we've got boom, right? Just imagine that's just like one big candle or something like that. This is going to cause what? It's going to cause FOMO, but not just like FOMO. Let's say that everyone's got their emotions under control. This will also be an additional confluence for the buy, because this shows them, momentum is on my side. Yeah. So even if they're not trading with emotions, this gives them another reason to take the buy. So this is what we like to see, because then we can look to take it in the other direction. Okay, so let's show our inducements, and let's look at our inducements. So, right, let's look at this. So our first inducement is inducing high, right? And it's although it's not like the best vector candles, you can still sort of make it out. But let's ignore that, and let's say, you know, that's in Asia. We're not going to trade Asia. Fine. Okay. So now we have build up into inducement to the downside. Suddenly, if you look at the build up, so from this point, you know, it's doing its thing, and then we have these two vectors bring the momentum in, and now people are getting interested. And if you want to be really advanced, notice how this inducement here leaves what is this? Well, this is liquidity. So this is also a hint as to what we could possibly expect later on. So now we induce Asia high. That's just a minor inducement. I believe we also induce something on the left over here, but even if we don't, that's fine, because look, we have our build up into inducement. What are these? Vector candles. Perfect. So now, if people were not enticed into buys here, they were enticed here. And let's just think a little bit about where their stop losses are likely going to be. Well, if they enter here off the breakout of Asia high, then their stop losses are either going to be at the equal lows or Asia low. So now we have an idea about where we should be trading towards. So again, look here, we're giving what? A false reaction. This is nothing to worry about. And this is actually further enticing people in, because look, if you turn it off here, so let's ignore all of this. Oh, sorry, let's ignore from this candle onwards. So we're just looking at this first grey candle. Look at this, right? At one point, this would have been just a fully bullish candle like that. And that would have been a likely confluence for any support and resistance traders, you know, the double bottom traders, or triple bottom in this case. That would have been a confluence for them to buy. So they're getting enticed in here. We know that this is just resting on liquidity, so we've got nothing to worry about. And then look, we build up here. Then what are these? We have a series of vector candles inducing to the downside. We induce Asia low, we induce the double bottom, triple bottom, and now we can look to trade away from this. But where should we be trading towards? Well, we've induced low to go high. So what are they going to do? Well, they're going to engineer liquidity, which is what this is. Again, we come up, we induce a little bit high, but overall we know that our target's up here. So then we give build up into inducement to the downside of this channel. You see this channel here, we're inducing that to the downside. And what are we doing? Mitigating our inducement. That's for a bit later on, and that's a later step, but still, then we see it all over again. We're giving our build up inducement and then push down, and then again we build, we create our equal highs before taking them out with what? Vector candles. So this is our inducement to trade away from. But after we have this inducement, we go straight into a build up, and now we have inducement to the downside. Yeah. So that is the second step, which is obviously inducement into mitigation. So what is our next step? Well, our next step is, this is obviously optional. You don't have to use structure, but if you are going to use structure, you want to apply it after you've, not before, but after you've had your build up into your inducement. You never really want to be using structure before you've had either of those things, because it does provide, and what you'll see is a lot of members in the LIT community trade directly against structure. So if you are going to use structure, you have to apply it in the correct way, and you need to be very careful if you've had a BOS, but it's actually an inducement of liquidity, and now it's coming against you. So I will show you some examples of that as well. But right, so the BOSs are the purple ones. So let's go over this. So we have, right, so why would we not look at this as a BOS? Well, we've had an inducement to the high side. So we need to be very careful. Firstly, we need to be careful of taking mitigation from here anyway. Why? Because this is just liquidity. But even more so now that we've induced to the high side, they're going to want to come down and induce to the low side. So we need to be very careful with considering this BOS right here. So again, we have this BOS. Where would our potential mitigation zones be? Here. Obviously, this is another reason why waiting for BOS can be not so good at times, is the BOS often comes late, right? So in this case, it's come late and it's not given us the entry. The only entry on M5 would be this right here. Now, that doesn't mean to say that every time you see something like this, boom, 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 that's an entry. There will be lots of confluences for you to take this. You don't just take it because you see, oh, build up, inducement, and then here's my mitigation. That's not what we want to do. We want to stack confluences in our favor. Right, so now that we've induced to the low side significant liquidity, this is liquidity that was built up throughout the day, right? These are our equal lows, and this is Asia low. So this is a lot of liquidity. So now, yes, this is an inducement which does cause a pullback, but we have reasons to understand, okay, maybe this break of structure here is valid, and maybe this becomes a valid mitigation. Same with here. So now we've mitigated the inducement. This is your internal break of structure, and maybe you wait for price to come back here, or maybe you have some confluences to get into it up here, right? And then you see we have no break of structure here, and then our break of structure here would be this. All right, perfect. So we've discussed build up, inducement, break of structure. So what's next? Well, what's next is our mitigations. So next up, we have mitigations. So I'll just read this very quickly. Price fills inefficiencies, imbalances, comes back to a supply or demand area and provides you with a point of interest. You know, maybe something that you're either going to monitor and then look at lower time frame confluences, or just take a straight limit off. So this is what it looks like with our mitigations. So again, here we have our inducement high, potential mitigation. Again, a bit tricky because this would technically be our BOS if you were trading that, but we know, okay, this is our inducement. So we need to be careful because this is just Asia high. This is not something that we expect to hold. It obviously can, but we don't expect it to hold, right? And then we have this inducement to the downside. This would maybe be a potential mitigation if you've got something like this, where, you know, it comes back to it pretty much like immediately. You don't want to take this after we induce Asia high. Why not? Because look, this is resting on liquidity. So this is going to become a trap that we don't want to take any trades from, right? Next up, you've got this potential mitigation, but you also have this one after your BOS. And this is something that you do need to be careful of, because once we've induced to the downside, yes, you can still take this mitigation, especially if you have your inducement high into, you know, vector candles, into timing. You can take this mitigation, but you should not expect this mitigation to come past here in this case. And why is that? Well, where is our most significant inducement? That's going to be this one, right? This is all of the liquidity that has been taken, and here we've induced it all. Whereas this is just an inducement of Asia high. So obviously we can't see high time frame. We'd have to take that into account as well. But from what we're seeing here, we can understand, okay, this is going to be the more significant inducement that's going to take us higher, right? So if we are taking this inducement, we have to understand this mitigation. We have to understand that we are actually trading a likely smart money trap, because if smart money take this trade, where are they going to TP? Down here, right? Or possibly even lower. So we know, okay, this is not reasonable, and this mitigation here, especially when we have build up and also build up here into inducement, into mitigation, all within timing. Again, we'll get into that a bit later on. Don't want to overwhelm you, but it's important that we understand why this is unlikely to go and create a new low. So yeah, we need to understand why that's unlikely to go and create a new low. Also, one thing that you do need to consider is if we could see higher time frame, maybe the higher time frame does dictate the, okay, we've had like a higher time frame inducement and we can go lower. But in this case, it didn't. So that's why when we look on the M5, we can see like, okay, this is our most significant inducement. We should be trading away from this one. But all of these mitigations should make sense. Again, here, you can take this. In all honesty, if you do take this, this would likely be a possible loss. Also, this is very late in the day and it's not really a time that you want to be trading. This is going to be around 4 p.m, around 4:30 UK time. So that is just something to consider. All right, perfect. So next, that was that example, but obviously we've got so many more. So let's jump into some more. Why stop there, right? Right, Euro GBP on 24th of May. Now this can look a little bit confusing if we just look at this as a whole. What am I looking at? What is this? So what do we need to do? What is the first step? The first step is to always look for our build-ups. So if we can't, like it says, if you can't identify your build-ups, stay away. It's as simple as that. We don't want to be getting into things due to FOMO or anything like this. We want to make sure that we're taking the best trades and we're not just letting our emotions get a hold of ourselves. So we always want to identify our build-up first. So let's do that. And let's go over them. So Asia, to start off Asia, we had this little sideways build-up. We induced to the downside again with momentum, and then we came up and we induced to the high side. Right, from this point on, we built this channel right here, and then this is the end of Asia. So coming out of Asia, we build some nice little equal lows, and then once we get into our first timing, I don't want to go too much into it, but this will be Frankfurt Open. You can see that we have what? We have vector candles into an inducement low. Perfect. We then trade away from that, and then we go into another little channel, higher, and we induce this channel to the downside. So now that we've induced this channel to the downside, what are people going to be doing? Well, they're going to be selling with their stop losses at this high. So what happens? We smoke right through it. Simple. Again, I don't want to get into it too much, but this is another timing. This will be called magic minutes. One, the first of them. Right. So now we have induced to the high side and we begin again. What's this? Well, this is our build-up phase, right? And look at how we come out of the build-up phase. Inducement to the downside. Again, I can't tell you exactly, but I'm pretty sure this is another timing. This will be MM2. If you want to go and look at the day and just clarify for me, I think it will be around 11:30 UK time. So we now have inducement to the downside. But look, there's even more, right? We channel, build up, very similar to this over here. We even get the creation of equal lows. We get a wick, perfect, wick down, get all of the people into premature sells, and then we continue in the intended direction. And look here, right? Again, what are we doing here? Faking the reaction, faking the equal highs. Oh my God, all of the resistance traders are getting in. Look at that. Look at look at this. That's going to entice them in. Now they've got, oh yeah, candle confirmation as well. But we know better. What happens? Boom. Induced. Okay. And then again, we wait for our build up. So where's our build up? Okay, perfect. We've identified our build up, inducement, and then rinse and repeat. Build up, inducement. Okay. So obviously, what is our next step? We've shown all of the build ups, apart from like this one here. But we understand, okay, this is build up of equal highs. This is an inducement of these equal highs. We understand why we trade away. Okay, so what do we have now? Well, now we have a inducement. So our inducement, again, this is the last impulse to stop out retailers, or it's the last impulse to make retailers open their positions. Obviously, if it does both, so for example, let's say we've got something like this. That's our double top. So people are already in sells, but then you've got breakout traders who are going to enter buys when this gets taken out. So as this comes up, boom, let's say their stop losses are here for the sellers. So the sellers have been stopped out. The breakout traders have now entered with SLs down here. So what is the ideal situation from this? Boom. And we take out. So this move brings in breakout traders and stops out the like support and resistance traders. So this would be like an ideal inducement. Okay, so let's jump into this and see any examples. All right, perfect. So here, what do we have? Well, we've already identified the inducement high. We trade away from that until we get an inducement low. This was our first build up. So we have build up inducement, but this is just Asia high and it's not within any timing. So we need to be patient. We then see, okay, price is building up again. We get our Frankfurt open inducement. Again, you can go and check that. And now we begin to trade away, right? Now it looks good. Okay, so we're trading away. Again, we do induce Asia high, but we likely have something on the higher time frame or some liquidity, or even we know that this is our main inducement for the day and we should be trading higher. So we've had our build up. Again, inducement high, they induce high to induce low to go higher. And then again, vector candles, lovely, induce high. We get our pullback until we have this channel. We break out of the channel, induce to the downside. So now we need to be careful about entering sells because we know, okay, we're likely going to come up and take this high. Again, build up. So if you didn't get in here, you've got your build up, your inducement low, and perfect equal highs into mitigation. You take that up to here. Obviously, lower time frame refinements, and this is not the best RRs. It'd be like a 1 to 2.5, but there's something in here as well on the M1. I'm sure probably got like an entry helper confluence. Okay, but I don't want to dive too deep into that. I want to allow us to get through all of this. So again, build up with the equal highs, give the reaction away, because for it to be liquidity, they have to show it. People have to be able to see, okay, these are my equal highs. This is my candlestick confluence. So now I'm going to be entering sells. And then what happens? It comes up, takes them out before going in the intended direction. Okay, so this is our inducement high that we're now trading away from. Perfect. And then again, build up into inducement low, and now we're trading away, and then again build up into inducement low, and now again we're maybe trading away, maybe not, because from like this point onwards it's very late in the day and they could just be building liquidity for the next day. So at this point you're best off just waiting for Asia. Okay, I think that covers all of these inducements. Obviously we would have possible entries here, definitely an entry here. This would be a very nice trade, but I don't want to go too much into entries. All right, so next we have our break of structure. Again, it's optional, but let's see where the breaks of structure are in this example. So this is what I mean. In this example, it would have been quite nice. So we obviously have our inducement high into our channel, into our inducement low, with again re-inducing low after our build up and our vector candles. Okay, also timing, like I said. So now we have what? A internal break of structure after our inducement. So now things are getting a little bit juicy. So we can set our limit right here. Boom, boom. Mitigation instantly gone. Okay, so this would be a very nice trade. You'd be very happy getting in this trade. And then again, we have build up into inducement low for it to continue higher. And now we've got build up, inducement, and then this would be the point where you'd have your internal break of structure again. So we potentially want to see some kind of mitigation within here, but nothing is too nice, to be honest. There's nothing too nice for mitigation because the majority of this is filled. Maybe you could find something on M1 that's quite nice, but in all honesty, I don't want to go into that too much. I want to be pretty, just want to stick with what we're doing right now. So perfect, right? Then we've got inducement high. This is the push that led to this high. So this would be our break of structure. Now, potentially there is something nice in here. And maybe this is confirmed by the entry helper, but we're not going to go into that. We're just wanting to show you the simplicity approach up to mitigation. So you get a bit of a feel for it. You can go away, play around with it and see how you find it. So again, build up into inducement. What does the inducement have? Good speed, good momentum, tricking people into, okay, sells. Now, what do we have? Inducement high, potential mitigation, break of structure, potential mitigation again, except like we said, this is end of the day, so likely all of this is just going to be liquidity for the next day. Okay, perfect. Next up, we have our mitigations. So let's go over them. Obviously, the breaks of structure are not required. So let's have a little look. So here you can see we have our inducement, our mini break of structure, little internal break of structure into boom, mitigation. But again, this is Asia, so you're probably not going to be trading that. But again, this would be the Mona Lisa of the day. Build up, inducement to the downside, break of structure high into mitigation on the M5, and look at the push that you get from that. Beautiful. This is likely some higher time frame liquidity, so you know that you can be targeting right there. Again, this would not really be worth taking, but just for understanding's sake, you can take this. There was likely something on M1 as well, but getting in like this is quite advanced, so it's much better for you to wait for your confirmations and get more familiar with the process before you jump into taking all these crazy like inducement and mitigation of the inducement entries, right? Again, here we come out, we induce, break of structure high, but there's nothing really too nice for us to take in terms of mitigations. Okay, next up we have this would have been very nice if the RR was a bit nicer, because we have a clear target of this high right here. We even fake this out, so you've got equal highs right here. And yeah, this is just a beautiful buy into a sell. Unfortunately, we don't get that nice mitigation that we would have liked to have gotten. Okay, again, here we have build up, inducement low, potential mitigation. But what do we know? We know, okay, we've had a pretty significant inducement high, and then we've had an inducement high again. So we need to be quite careful about this mitigation here. Even if it was early in the day and you were still within good timings, you'd want to be quite careful of this mitigation here, because you'd actually be going against this inducement, and you just want to, this would not be like, this is not, definitely not a straight limit. And also what you have over here, potential equal lows. So this is resting on liquidity as well. So you need to be very careful about that. So that is our second example of the simplicity approach up to mitigations. So I think we do one more of a bit more advanced example, because yeah, obviously we have build-ups, but you can have build-ups within build-ups, and that when you begin to identify your build-ups within build-ups, that's how you get into like the real intraday ping pong of like understanding each move and stuff like that. But let's not get too far ahead of ourselves, so let's just jump in. I'll give you a moment to just look at it. Where do you think the build-ups are? Where do you think are, where would the biggest build-up of the day be? If you can identify that and then identify the smaller build-ups within that, that's a very good step. So let's not delay, let's just get right into it, right? So coming out of Asia, what do we have? Well, first off, we have channel to the downside, presenting equal lows, vectoring down, okay? Possibly even inducing something from the left. And then straight away, we have channel into inducement high, potential mitigation over here, but we're still trading away from this inducement. And then we go into a bullish channel, induced to the low side within timing. Again, I don't want to jump into that too much, but maybe just something to get a little bit excited about. You can see that this is MM1, potential mitigation here as well. You can just sort of see that from the M5. But again, we're still within this channel overall, right? Same thing again. We induce Asia high, but this is just like a little minor inducement to the high side. And then we build a channel. we build a channel. Perfect. A little sideways one. And then vectoring out. Reaction from middle of nowhere. What is this doing? Building liquidity. Any people who have bought Asia high breakout, where are their stops? Likely here or Asia low. So we know where we should be coming to. So build up, channel high, into again, timing, London close. We'll go into that in a little bit. Into bang, inducement low. And then of course we're getting late in the day, so we expect price to just consolidate a bit, maybe build liquidity for the next session, next day, sorry. So perfect, we understand all of that. If you got this build up correct, perfect, because you can see how this allows us to identify those really nice inducements where we can trade away from for a pretty long time and give us some nice direction. Obviously, these ones can be a little bit tricky to catch, especially if you're waiting for your break of structure, because where would it be? Probably down here, right? And by the time that's happened, you've already induced low. So this mitigation up here is like, you can maybe still take it, but you just have to be a little bit wary of it and a little bit cautious. You don't just want to blindly take it, right? Okay, so that is that. So let's jump into the next step. So we've had our build-ups. Now we want to identify our inducements. Okay, perfect. So let's see. Our inducements would be, first off, we've obviously got these equal lows. So we induce this to the downside. And then we've got here, we build equal highs. We build this channel, we induce to the high side and also induce to the downside. So obviously this one could be a little bit confusing, but we see like, okay, this is a pretty significant inducement. We've built a lot of liquidity, we've taken a lot, we've possibly had a mitigation, possibly also a higher time frame inducement, right? So, you know, you build up these like the strengths of the inducement, and you can understand why this one just gives a pullback versus this one giving entire reversal. So yeah, and then again we had, so inducement to the downside, we induce this channel to the downside. What do we induce it with? Momentum for this inducement as well. Perfect. Especially look at this candle right here. This would be basically one solid candle, so they'd be loving this, you know, getting into their sells up here. Where are their stop losses? Likely up here, right? So then we come up, we induce high, we take people out of these sell positions, but also we get people into these buy positions, you know, the breakout of Asia. Where are their stop losses? Down here. So that's just something to consider, something to think about. We go straight into a build up, okay, no trade, and then look at this momentum, inducing all of it to the high side before having a little micro, like, you know, you're building like your M1 equal highs. So this would be like a little mini cycle, M1 equal highs into inducement high, all within timing. And then, so all within timing, you've induced all of this build up, you've induced this little minor build up, and you've induced this little mini build up too. Now we know that the people who have in their breakout buys are absolutely loving it because they're in all of this profit and they're like, wow. So they can do one of two things. Either they go break even or they leave their stop loss open. So we know that now that we've excited them, there are people who are also going to get in on the break and retest. So we're going to have entries here as well. And because we've had an inducement high, we know that this is likely going to get taken. So what happens? Price crashes down. We fake a reaction here. Faking what? Equal highs. Maybe equal low, sorry, maybe they're like, oh, you know, I'm in drawdown, but it's fine. I just re-enter because this is giving me the confluence to re-enter. Again, look, we pull all the way back, London close, likely mitigate something. Where are we going to go to? Asia, low. So we have our build-up, inducement to the downside before giving our reversal, buy. Now, there would be possible entries here. You can just sort of see it from the M5. But again, these aren't entries that we want you to focus on. It's much better to have to get those clean entries before you try and do anything too crazy with like these inducement trades, because the last thing you would want is to be caught in something like this where you're trying to guess where the inducement is done and you're taking L's throughout here. You need to have a good understanding of this. It takes a lot of time and a lot of practice, so we don't want you to just jump in trying to take like these, because you will get burnt quite a bit. All right, little tangent there, sorry about that. So we've identified the inducements, we've identified the build-ups, we've identified the inducements. What's next? Breaks of structure. Again, this is optional, and it can appear late, so we want you to, you know, put a little asterisk by these, but obviously these can be good as well. So first off, very nice inducement low, and then this is the push that creates the new low. So this is our break of structure. So now you can be trading away from this. Maybe you take this mitigation. Maybe you have some, you know, mitigations in here that you can take, but now you sort of had it confirmed. We haven't had any inducement high yet, or nothing significant, so you shouldn't worry about whether this break structure is valid, because we haven't induced anything high. So you can relax and take this. And then obviously after we have this one, we have this push down. This would be the break of structure point. Obviously now we'd be a little bit concerned. We possibly think these were smart money traps, which we'll also get to in a little bit, because we've had a significant inducement to the downside. For price to sort of validate these, you'd want like a build up into, you know, maybe like the next day comes, you get like a build up, you have timing, boom, maybe then this becomes like a valid mitigation to go lower. And then here we also need to be a bit careful, because this is an inducement. So, you know, you'd also class it as a break of structure. I'm sure now you can see why using break of structure is optional. But if you feel comfortable, you feel more comfortable with using it, then go for it. And then obviously here, after this inducement high, we have this break of structure low. So, yep. Next up is obviously our mitigation. So let's jump right into that one. So after we have this break of structure, we can take this mitigation. Maybe there's something on the M1 within here as well, and here. But again, you need to be careful. You need to align your confluences. You don't want to be taking random M1 mitigations. So obviously we also have this mitigation, but by the time that we have induced high up here, we want to be very careful of these mitigations right here, because we know, okay, there are stops down here, so we want to be careful about taking them. And then here we obviously have inducement. You maybe take this mitigation. As you can see, not much point in it, because you're not really, even if you take this, you understand that this is a false reaction, and you're not going to be looking to take this to create a new high. But on the other hand, taking this mitigation here would be very nice, because you could take this up to here. Obviously, you could also refine down to like M1, but these would be more advanced ones as well. So, you know, if you're on the M1 right here, you would be basically taking the mitigation of the inducement, which can be a little bit scary and not advised if you're just starting out. You want to just pick a style and go with that style. So again, we have inducement high, break of structure. So if it was an end of the day, this would be a nice little mitigation. But also, if you can just imagine the M1 for a second, specifically right here, you'll see that what price did. So I'll start off drawing it from this point here. So we came down, boom, pushed higher like that, would have broken structure here. So maybe there was something nice in M1 for this, because this was our inducement on the left, right? But again, just showing M5. Okay, and let's get another example in. So, like we've been doing, this is a more recent example, 21st of June, and there are a couple nice things about this. So just to give a little bit of an explanation, obviously you guys aren't at this point, but when you get introduced to the Discord and you have full access, I have a series called The Edge, and this is where I basically take trades live. I take trades live. I show the execution, show where I'm going to go break even, show where I'm partial, where I TP, and all of this sort of stuff. And there are actually some AU trades on this day that are in the Edge. So after you finish the boot camp, you can actually come back to. You can actually go and watch the Edge and see where I took these trades. So anyway, let's get into the simplicity approach. Let me just get up my annotation. Okay, perfect. So obviously, first step, as always, I'm sure you're used to it now, is the build-up. So where are our build-ups? Well, obviously we have our equal highs here. You can even show your build-up of like your channel here with, oh, that is very bad. Let me do that again. So obviously equal highs, the channel here, inducement high, again, channel low, induced this low. So that's an inducement low, but what is it also? Creation of liquidity. And then again, we love our vectors. Again, channel, induce high, induce the equal highs that we created in Asia. And again, what is it? Vectors. We like to see that. This one's a bit more tricky, but I actually did take this trade. I was waiting for this mitigation, but after I saw this get induced, I did get in. And then again, we've got so where are we going to be targeting? Here. Equal lows. They obviously get induced with vectors, and you do get your pullback into another inducement. We will understand why this one didn't work at a later point. And then again, to end the day, we have channel build up into inducement here. And obviously we trade away from that. And then obviously we have our end of day consolidation. So you should know what is next in our steps. We've done the build up. What is next? Inducement, of course. So just to cover this quickly, last impulse to stop out retailers. We all know this stuff. Or it's the last impulse to make retailers open their position. I've spoken a lot about vectors. So obviously you want to see the strong momentum, because that gives the FOMO of, that gives either the FOMO or, like in some cases, the confluence for them to actually enter the trade, because they're seeing, oh yeah, I've got momentum on my side, so I'll hop in. So yeah, obviously it's perfect if it stops retailers out and also causes them to open their positions. Okay, so let's go over the inducements. Obviously, first off, we have this inducement low, but we also see that this does create liquidity. So this is already giving us a sign of what we could possibly look at. Maybe when we get an inducement high, we can look to take it down to here. So again, we induce this double top, nice momentum. You'll know what this box is very soon, but this is basically a timing confluence as well. We like to see inducements within this time. Obviously we have inducement high. And then again, this one's a bit more tricky, but we have a little mini build up into ever so slight inducement high. And then obviously we vector down, come out, take these equal lows, inducement low, give a bit of a pullback into another inducement low. This time it's within timing, and then push off. Okay, we've induced low. What do we expect to induce high? Boom. So we induce high, we have our channel build up, we then create equal highs. What's this? Nice little vector upwards, wick it all out, take out any people who were selling from, you know, the equal highs or whatever, and then we crash down, obviously giving our end of day consolidation. So we're not going to trade after London close, right? What is the next step? You guys should know this off the back of your hand by now. Next step is obviously optional. It's our break of structure. Sometimes it obviously does come a little bit late. Personally, I don't use break of structure, but I know that it's a nice confluence, and while you guys are still figuring stuff out, and you maybe you're still using structure, or maybe you still want to use structure, we'll obviously show you how to tie that in. You don't just want to be applying it wherever. It's always after these inducements and stuff like this that you really want to be applying structure. All right, perfect. So our breaks of structure are right. So why is, for example, this not a valid break of structure? Well, this is obviously equal highs. This is going to be an inducement. So it wouldn't make sense for us to buy from here, especially considering it lies on equal lows, right? So obviously we've got our break of structure here, and then here we also have our break of structure that you can trade away from. And again, after our inducement high, break of structure low. So that's very nice. Now, for this one, I think I'll maybe touch upon entries a little bit, because, you know, maybe give something for you guys to get a little bit excited over. So mitigation, this is obviously the points that we want to possibly be setting limits or looking for our lower time frame confirmations. So let's just go over the potential mitigations. So obviously we have our inducement low, mitigation. Yep, inducement high, mitigation, or after our break of structure, we could have this mitigation. And if you go onto the edge, it will be 21st of June. Maybe make a note of it to do it after this, after you've got access. You'll see that I actually had my limit here. I put my M5 limit around here. So after we'd gone into like the build up, but once I saw that the build up had been induced right here, I entered here and there was an M1 mitigation right here. Didn't get filled, but I just put my stop loss above here, and I actually targeted, there was a low to the left right here. So that was one of the trades that I took on AU. Yeah, and this was the other trade that I took, again, to down here. This was obviously with a tighter stop. I think this was like 1 to 9. But yeah, these are some very, very nice trades. Now, obviously, this would likely be a break even or even a potential loss. This mitigation didn't give anything, and neither did this mitigation. But obviously, we can see how it all plays. What you want to do, just getting a little bit ahead of ourselves, but I'm sure you guys won't mind. One of the things that you actually want to do is you want to understand like where you're going to be taking price. So before you don't want to be like entering without knowing roughly where you want to take price. So that's just a little tip for you guys. Obviously, we have one more, and then that will conclude my bit of the simplicity approach. So let's go over the last one. This was AUD/USD on the 16th of June. Again, I had some trades within this, so we will, and they were not on the edge, actually. They were not on the edge. But yeah, I'll go over what I took and why I took it, but let's obviously bring some clarity to the chart to start off with. So we're going to go over our build-ups. Right, we've got the first build-up of obviously Asia here, induced to the low side, induced to the high side. Then we begin to channel, a bit of a larger channel with an inducement to the downside, and then again channeling down. We actually induce this low, but still creates liquidity. We come up, we induce high, and then again channel low whilst we're in this overall bigger channel. You can see we induce that with lots of momentum, vector candles, and then we just trade away to Asia high. Absolutely beautiful. Sure, that makes a lot of sense. Nice and simple. So what is next? Well, next up, we obviously have our inducement step. So let's identify the inducement. We obviously have an inducement low of this channel, and then an inducement high of this channel. Again, lovely vectors either side. We then have our build up into inducement low within timing. Again, nice momentum, nice speed. Continuing on, like I said, we've channel downwards, induce low, but also create liquidity before coming up with what? Vector candles, inducing high to go low and induce the overall channel, right? Then we do this with what? Vector candles before continuing higher for the main move of the day. All right, so next up we obviously have break of structure. So where are our breaks of structure? Well, it's going to be here and here, obviously away from our significant inducements. Again, you can see it happens quite late, so you can sort of begin to understand why we don't use break of structure, or why we don't, why personally I don't use it at all, really. But obviously, if you want to use it, there's no harm. Just make sure that you're not randomly applying it, and always applying it after inducements, significant inducements as well. You've also got to consider, if we've induced to the downside, but then we induce to the upside, maybe this is not a break of structure and you should not take a limit from here. All right, next we have mitigation. So this is where we can actually get into some of the trades that I took. So yeah, this all makes sense. Even this would be, obviously you're not going to trade this within Asia, but just for the understanding sake, we've got our, instant fill right there. Again, mitigation here after the inducement, mitigation here, mitigation here, mitigation here. So where were the trades that I personally took? Well, I took this right here straight off the inducement, and then I got in again off the mitigation. Where did I take that to? Right here. And then I took this sell. I think I took it like this and down to here. When you get access to the Discord, if you want a bit of a deeper explanation, don't hesitate to just ask. because I'm always willing to explain any of my trades, because the main thing is everyone here at LIT is just very passionate about trading itself. I just enjoy it, obviously. That's going to be my bit of the simplicity approach up to mitigation. Don't worry, guys, we've got so much more coming. This is still just, believe it or not, this is still just the tip of the iceberg. But yeah, I'll pass it on.